life had changed dramatically, but I wasn't fulfilled inside here. And I was, having a conversation with God saying, God, if this is my calling, how come I'm not fulfilled here? And he just said, listen to opportunities. So I got an opportunity to go to this real estate conference. And I heard some guy get up and say that he helps people build and transfer generational wealth. And he focuses on how to help seniors and their families. And I said, you know what? That's it. That is my opportunity. That is my
Wow.
calling.
Hello, this is Matt Helton with One Trust Home Loans, your reverse mortgage experts, and you found the Serving Seniors podcast. Now, that's where we highlight those businesses and individuals that help seniors not just survive, but thrive in retirement. And today we have another one of those awesome people. We have Mr. Cory B. Now, Cory B is a certified real estate planner, and he's a senior advocate. And he wants to share with us today how real estate can be planned and how it can help seniors transition and also help their family. Cory B, how are you doing today, sir?
Awesome. Awesome. Thanks for having me. How's it going?
And it's going great today. How's life for you?
Absolutely wonderful. No complaints in life, man.
Okay, man. Great to hear it. Well, thanks for carving out some time to visit with us. I would love for you to maybe share your journey, where's home, where you're from, and then bring us up to speed how you became a certified real estate planner.
Perfect. So I'm out here in Southern California. My
Okay.
team and I, we cover from San Diego all the way up to San Francisco. I got a pretty big team. We specialize helping seniors and their families plan for the future and beyond, and wanted to have a better, bigger conversation than just putting a sign in the yard and selling the home, getting our commission. As a certified real estate planner, we help people build, protect, and transfer generational wealth through real estate,
Oh,
as
wow.
well as help with the downsizing, the decluttering, the organizing, the packing, the moving, the estate sales, repairing of the home, staging the home. Because our ultimate goal is we know a lot of families, the real estate is their biggest asset, and
Yep.
this is how they're going to plan for the future, and this is what they're going to pay for long term care. Um, so we really want to make sure that they're really capitalizing on getting the highest dollar in return for their money. We also know there's a lot of scammers out there that are trying to convince families to sell it to the all cash investors. You get to save money on commissions, but you're losing 10 to 20% of the value of your home by
Yeah.
selling to them. So we're just out here trying to empower through education, bring value, be more than an agent. And that's kind of where we're at today.
Dude, that's great, man. Now, where are you from? Southern California, or where's home?
One of the few, born and raised, pretty much within like a 30-mile radius. I pretty much,
Okay.
yeah. So it's pretty exciting. I'm up in like Ventura County, right where Ventura County and LA County come together.
Okay, nice. And was that your first job out of college or school, real estate?
No, well, so getting out of college, I went and I got my real estate license. I did mostly loans until the loan crash, the housing crisis
Okay.
of 2008. I got out of real estate and went into the film industry on the crew side, basically, working with camera and lighting,
Nice.
really hating every moment of it. And every year I'd say, God, is this the year I'm supposed to get back into real estate?
Okay.
I swear to you, man, I would hear a voice, out loud saying, "Yes, it's your calling. Get back in real estate." And I just kept fighting them on it.
Wow.
And it wasn't until I had a huge neck surgery, where I woke up from neck surgery, going, "Okay, God, I'm listening. I'm getting back into real estate." And I just heard him say, focus on building relationships and making partnerships. So I became a top producer within my first 3 years. I sold over 100 homes in the first 3 years.
Wow.
And I kind of learned that it was great. Life had changed dramatically, but I wasn't fulfilled inside here. And I was, having a conversation with God, saying, God, if this is my calling, how come I'm not fulfilled here? And he just said, listen to opportunities. So I got an opportunity to go to this real estate conference, and I heard some guy get up and say that he helps people build and transfer generational wealth, and he focuses on how to help seniors and their families. And I said, you know what? That's it. That is my opportunity. That is my
Wow.
calling. So I went to, got educated, took over a year of, getting certified in different areas from trust and real estate probate specialist and 1031 exchanges and DSTs and senior relocation and senior transition specialist, really learning how to help with the harder transactions and then
Okay.
all the pain points and saying, okay, how do we help people, when they're in moments of crisis? And then I have a heart to how do I help them be proactive to hopefully avoid the crisis? So
Mm.
that's kind of where we came at. And now it's I'm actually starting a whole division for a brokerage, helping agents help seniors and their families on a higher level. Because I think it's the most misunderstood and underserved segments of the real estate market.
Sure. Wow, that's awesome. Well,
Yeah.
could you maybe make it a little more concrete for us? Is give us a couple examples of maybe some people you met, things weren't going as planned with real estate, and you were able to take them through your process and how they came out on the other side.
Yeah. So I mean, one of the clients that really helped me realize that I need to do a better job and have a better understanding, it was a client I was referred to from someone I went to high school with. And he said, "Hey, my mother-in-law, she has this house, it's hoarded out. We really care for her. We want to help sell it so that she can, move out and get care." And I said, "Okay." I went in the house. It's one of the worst houses I've ever seen. Like I wear shorts and sandals almost everywhere. And I was wearing a hazmat suit, in that house.
Wow.
And there was just something that I didn't feel was right. Like that, if you really cared about your parents, you wouldn't let them live like this. And here she was, she's owned this home for 30, 40 years. And she had a pretty big mortgage on it. She still owed about 400,000. And it wasn't from her living lavishly. So I started getting some digging, and it seemed like she was constantly funding her son-in-law and daughter's lifestyle and their
Uh,
next business adventure. So I basically helped her find a house outside of, like, it was probably about 40 miles away, live with other family that we ended up helping her buy a house. We did get her a hard money loan. And the plan was that she would have this loan, we'd sell the home, and then she would go get a reverse mortgage, which I think is a great product for the right person, in the right situation.
yeah.
And we ended up selling the house. We put $450,000 into her account. And I said, "Okay, now you're going to go get your reverse mortgage." 3 months later, I got a phone call from her saying that she had not eaten in 3 days. I said, "Well, what do you mean?" She's like, "All my money's gone and I'm about to get foreclosed on." I said, "First of all, you can't get foreclosed on when you have a reverse mortgage." And she goes, "No, my kids ended up convincing me not to do that." I said, "What?" And she goes, "And now they've taken the 400 and almost $50,000 out of my account. It's gone." And she's like, "I haven't eaten in 3 days because they keep taking my social security money out too." And it was a gut punch because thought I had planned the perfect plan for her and got a good plan and got a good program and helped her remove herself from the hoarder situation. But I didn't actually follow through and follow up, making sure she actually did the plan and executed the plan. I also didn't realize that there's a lot of vultures and scammers. And sometimes, sadly, it's with inside the own family. So I didn't protect her from her own family. So I actually went in, I bought the house from her, saved her from foreclosure, and I gave her a life estate, which basically allows her to live in the home forever until she passes away. And I stripped her kids of getting anything, and I was okay with that because they stripped her of everything. Um, and that's where I really learned one about life estates, like how, again, right person, right situation. It's a great product, but also realizing that I need to help them plan, but then I need to actually advocate for them and really make sure they execute it. I tell all my agents that are on my team and that I train is like, you never want to Tinder date your client. And for those that don't know, it's you swipe right, you hook up, and you never talk to them again.
Uh,
You don't want to do that. We got to make this an eHarmony situation of like, let's be there till end of life and beyond. So that would be one, and that's really what got me to get going. Another one, I had a client of mine where I helped them buy their first home, and he said that his dad needed help real estate planning. So I called up the dad, and then I was like, "I got this all taken care of. Have my estate plan. We're all good." It's like, "Okay, can we just sit and meet and just talk about your plan? We'll look at your trust and make sure there's right things in it." And we sat down, we talked to him, and I said, "Okay, now I know you have it all planned." And he had about 5 properties and 4 kids, or 6 properties and 4 kids, sorry. And he ended up, I said, "Hey, can we meet with the kids and, get them all here? I want to make sure that they understand what your plan is. So we sat down with them and I said, okay, so here's your dad's plan. There's 6 properties, there's 4 of you. You're just going to divide it equally, which real estate is impossible to divide equally because you can't just, you know. And I asked the son, okay, well, what do you want to do with the properties? So, oh, I don't need the properties. I'm good. So we're just going to sell them and then we can divide up the money that way. I said, okay. And then I went to the next daughter, who was the next oldest. And I said, well, what do you do? Well, my mom, before she passed away, said, I get this home. So I'm getting this home, and it was worth one of the most out of all the other homes, and everyone else can just divide whatever they want. I said, oh, okay. Went to the next son. No, we're going to use this for rental income. Like we're going to, and each kid had a different plan of what they were going to do. Mm-hmm. And I looked over at dad and I said, now, if they all have a different plan now, how much worse do you think it's going to get when you pass away? And he goes, oh my God, I had no idea. I said, okay. So we call it a family feud prevention plan, which we do for free as advocates. And we sat down and we really started saying, okay, well, this is how much the properties are worth today. So if we start trying to divide the properties today, we'll lose the step up in cost basis. But doesn't mean that we can't divide them up on paper. So we went into his estate plan and he drew through like an agreement up that, one kid, there was about $1.5 million of properties that they were going to inherit. So one of the sons, he actually wanted to invest into some properties in Vegas and some short-term rentals. And I said, well, look, if we sold these properties right here, now your son, it will identify which properties you want. You're going to 1031 exchange it, so there's no capital gain tax due. And inside your trust, you're going to identify these properties as your son's sole properties. And we went through with each kid. So each kid got to basically predetermine their inheritance. And now there's less likely for there to be any dispute because if they chose the wrong properties, that's on them. And the daughter did get her one property and she owed a little bit. So she actually has to pay into the family trust over, the next 10, 15 years. And the father actually got up, gave me a big old hug and he said, you know what, like I could die tomorrow, finally knowing that my kids are taken care of and that this is going to be good. That meant so much to me. And I think that's what also inspired me going, hey, I want to help as many seniors and their families as possible because there are so many families going through this, neither doing something because they don't know what they don't know or not doing something because they don't know what they don't know. And so many times I hear, oh, I have my estate plan. We're all good. I have that all taken care of. Or my son has that all taken care of. Well, the son never got the trust. He never funded the trust, or he made it just to go into his name and nobody else's name. So, I really try to help them. And another thing I tried to do, and I'm kind of vomiting from the mouth, I'm sorry, but is that I hear so many times, oh yeah, I made my kid the successor trustee, or I made my kid the administrator. And I don't think people really understand what is entailed. That there's 21 different responsibilities and roles that you take place when you're the successor trustee and the administrator that can make you criminally and civilly liable for doing them wrong. And it takes a lot of time and effort. And most of the family looks at them and going, oh, they're going to X, Y, and Z, or they don't know what X, Y, and Z is. And so therefore they can take advantage of it because your trust has written instructions, but they're only as good as what the administrator actually, adheres by them. So I tell people that you might want to look at a private fiduciary or, a private administrator to help assist with the situation. Or like myself, my dad actually made me the successor trustee and the administrator. And I actually sat down with him and said, Dad, I have 7 kids, 9 businesses. There's no way I can be an administrator and be good at it. Why don't we just make it so the attorney can appoint an administrator when it comes time? And I'll just help oversee it just to make sure things are done the right way.
Wow.
So yeah, so that's kind of where where I'm at. And
that's so awesome. I love the examples because you didn't just read it in a book and you didn't just learn from the positive experiences. You actually had a negative experience where you thought it was all taken care of, but you can see the challenges of when you just let, a person not they're not the specialists. When let them kind of quote unquote do it themselves, and they have outside influences, how it can go sideways. So yeah, that's great. And then I was going to share with you in that example too. What we do a lot, the example where she's going to sell and buy another house. If it's not possible for them to go ahead and sell and buy, we call it bridge to reverse. So a lot of times we'll actually have a bridge loan where they'll go ahead and close on the property, and then you can sell the other property if you need to do it non-contingent, and it's not credit qualifying, it's not DTI qualifying, it's more equity qualified. So it works really well with seniors. We had one where the monthly payment was $6,000 a month, but they only made $2,000 a month in income, which doesn't sound very good on the surface, but we don't set people up for failure. They have to have 6 to 12 months of reserves. So that client had $200,000 in their IRA that they were over 70. So they were able to touch that. So we were able to make sure that they would go ahead and be able to make the payments, and they knew going in. But then a lot of times we'll do is reverse mortgage for purchase. So we have one now where the client, they're selling a 550 house, paying commissions, paying off $100,000 mortgage, and they're clearing 4. The challenge was she currently has a mortgage and she has no money in the bank. So she was going to clear 400. She found a 380 home. By the time she moves and pays for the furniture, she's going to go with a no mortgage, but still no money in the bank. So she's going to be able to, so what she's doing is she's selling, clearing 400. She found a basically 380 house. She's putting 250 down, doing a 150 reverse port for purchase. So now she's got a manageable home. She has no mortgage payment, so a manageable budget, but she now is liquid. She's got $150,000 in cash left over. She's currently working part-time on the weekend to make ends meet, and she's going to be able to save a little bit of money, and then she's going to quit her job and be able to have the retirement she's been planning on for years.
Love that. And I don't do reverse mortgages, but I think for the right person, right situation, they are an awesome program. It's sad that how the pre 2007 reverse mortgage was a terrible product, and it took advantage and it stole seniors' homes, and that negative connotation has still gone on for 20 almost 30 years now. And if people just opened their minds and got educated better, I wish they would just do away with the name reverse mortgage, call it like a lifestyle mortgage, or call it like, I know they're trying to do it with the HECM, the home equity conversion mortgage. Like, they need to change the name of it.
Yeah.
Because I have seen so many times where families are living like, I literally, this is a true story as well. She had $3 million worth of properties owned outright, and literally she said, I can't even afford to get my grandkids ice cream. I'm like, but you have $3 million of equity in your property. I know. I'm like, well, have you heard of reverse mortgage? No, my kids would never allow that. I'm like, well, one, those are your properties.
Yeah.
2, you're not talking that you need to take out, $1.5 million of thing. You could do $100,000, and now you just live off that $100,000 and take your grandkids wherever you want. So she ended up doing so. And again, most agents would be like, try to convince her to sell one. I was like,
sure,
I don't, she doesn't want to do that. And that standpoint, she, wasn't a good fit. So she ended up taking $250,000 HECM mortgage out, which then she's only paying on what she takes out. And she decided that she wanted to go on a trip around the world.
That's awesome.
She wanted to travel her whole life, never thought she was going to be able to. And instead, she literally went on this like cruise around the world, and she's going to be on a cruise ship for a whole year. And so I think that's like, people just need better education. And so that's really where my brand is. I do a lot of lunch and learns that are free for seniors and their families. A lot of times they're at assisted living, which is just another one of those negative connotations that you have such a hurdle over, because no, that's, it's my mom and dad's old convalescent home. I promise you, it is like a cruise ship on wheel or on land. Or I tell it like a fraternity, sorority, for seniors. Like, it is. I hope I can be in one of those when I get older and be able to afford it. So I think that's really what it's just talking about, is like, hey, you know what? Like, you can't get in prison inside your home. And, when seniors are asked where they want to live for the rest of their life, over 90% says, I'm going to leave feet first. I'm going to die in my home. I'm never leaving. Well, less than 17% of Americans get to do that. So I always ask the question of, I'm not trying to get you to move tomorrow. Anyone listening, not trying to get you to move tomorrow. There probably is a tax disadvantage to moving tomorrow. There's got to be some proper planning put into place. But God forbid a crisis was to happen. You fell down, you broke your hip, you go to the hospital, and there's a case manager there that says that you're not allowed to go live at home by yourself. You need to present to them a long-term care plan, or that you're not going to go live at home. Where is it that you'd want me to go advocate for you? Can we put that into your trust? Can we put that in a financial directive and a medical directive, so that way, if that happens, we have that plan in place instead of us choosing? You get Alzheimer's and dementia. You can't make an estate plan. And now it's really hard for us to say, well, where's it that mom and dad want to go? And people all the time, oh, I'm going to live with my kids. Do they know that?
Right.
And I will say that a lot of times the care that you might need far surpass what your kids can actually offer. And a lot of time, like for me, I would not be the right person to take care of my mom, love her to death. I just wouldn't be the right person. But what I could do is help her pay for it. Or what I could do is she can move into one of my assisted living homes where she could be treated like a queen and she can get the care she needs. And I can come and bring over family and grandkids and stuff. So I think that's really what people just have to step back from, of like, planning your future is about owning your future and being in control of your future. Because if you don't have a plan, trust me, the state will have one for you called conservatorship or probate, and you're not going to like it. It's stressful. It's burdensome. It's costly. It's timely. And that's where, nothing else. I hope anyone listening, just plan. You just need to start planning. Put long-term care insurance in place if you can still afford it. Go look at senior living communities of where you would want to go. God forbid you needed it. Because generally speaking, the last 36 months of your life, you're going to need some type of level of long-term care.
That's great.
So
very well said, Cory. Well, I think you put a nice bow on it right there. Very eloquent and perfect. But anything that I should have asked you that I didn't ask you, or anything else that you'd want to share?
I guess the last thing is, because it's my specialty and I can help people around the country. If you ever have a house and you're worried about capital gain taxes, which could be up to 42% in California and could be as low as 20% in states around, please give me a call. Nothing could be done. Very little could be done after you sell. So a lot of things have to be done with planning, but there are 14 different legal strategies that you can use to eliminate or gain taxes when selling your business or your real estate. So please give me a call, reach out. I do a free strategy session, no obligation to use me. I truly want to help. My goal is to eliminate $1 billion in capital gain taxes legally for people that come into contact with me.
Man, that's awesome. Well, that's a good segue. How would they get in touch with you? How's the best way to connect with you and follow you?
Yeah, I mean, you could follow me on Instagram. It's Cory B, your RE planner. You can look me up, Cory Boldroff. So last name spelling is Boldroff, and the only Cory Boldroff in the world. My cell phone is 805-206-4192. Everything's public with me, except for where my home address is. But, please reach out. I'm always your help, never to pressure. And I do a lot of lunch and learns, webinars, just empowering people through education.
That's fantastic. Well, Cory, thank you for all you're doing. Thank you for your heart of a teacher and being willing to plan and share so openly. That's amazing.
Yeah.
I really do appreciate it. And
Perfect.
Cory, please feel free to come back anytime. We'll keep an open door policy for you. Okay. And Thank you for helping the Serving
Thanks so much.
Podcast, where we highlight these awesome people like Cory that help seniors not just survive, but thrive in retirement. Thanks again. Have a great day. Hey, this is Matt Helton with OneTrust Home Loans, home of Retirement Mortgage Solutions. And we really do appreciate you checking out the Serving Seniors podcast today. Now, please go to the description down in the body of the podcast where you can subscribe to get future shows. Please click that notification button so you get notified when other shows drop. And also, if you can go to servingseniorspodcast.com And we'd love to hear a comment about our show. We have a heart to serve seniors, and we have a heart to make sure seniors don't just survive retirement, don't just get by in retirement. We want to show seniors how to thrive in retirement. So if you know of anyone that's 55 and older that could use some extra cash flow, maybe the retirement's not going the way that they like, our retirement mortgage solutions are designed for folks, and depending on the state, they're either 55 or 62 and older, to make sure that they have that kind of retirement that they want. As long as they own a home and they're in a good equity position, there could be some solutions that they may not have thought about, or maybe they've thought of and they just didn't know how they work. That's what we do. So anyone in that age group that could use some mortgage advice, my team and I would love to be able to help them. Thanks again, and look forward to seeing you on the next show. Have a great day.